If you drive Uber on weekends, sell on Etsy, or earn a bit from YouTube or OnlyFans, here's the part you need to hear before you lodge. From the 1st of July 2024, every major gig and creator platform in Australia must report your earnings directly to the ATO, even if you only made a few $100s, ATO 2024. The days of "they'll never notice" are over. By the time you sit down to do your return, the ATO often already has your numbers. Record numbers of Australians now work multiple jobs or run a side hustle, ATO 2023. And undeclared income is increasingly triggering warning letters, amended assessments, and penalty interest, sometimes years after the money was earned, Infinity 2023-26. Today, I'll walk you through 3 moves before you hit lodge. Check what the ATO already knows about you, decide whether you're a hobby or a business, and build a 10-minute tax buffer on every payment. Here's the number that should make you sit up. The maximum failure to lodge penalty for an entity is $12,500. That's on top of back tax and interest, ATO 2024. It's 5 penalty units per 28 days, up to 5 periods, at $313 a unit. For most individuals, the practical exposure is lower. But here's the part nobody tells you. The bill almost never arrives alone. It comes with back tax, daily compounding interest, and penalties stacked on top. 3 moves. Check what the ATO already knows. Decide, hobby or business. Then ring-fence your tax on every payment. Each takes under 20 minutes, and all of them are free. Let's start with the mechanism. Since the sharing economy reporting regime rolled out, most large digital platforms, Uber, Uber Eats, DoorDash, Menulog, Airbnb, Stays, YouTube, Twitch, Patreon, OnlyFans, Amazon, eBay, Etsy, and the major crypto exchanges now send your income data straight to the ATO through mandatory data sharing protocols LDB 2024. The ATO automatically matches that data against your tax return. If what you declare doesn't line up, it can issue an amended assessment, a bill for the shortfall, plus interest and penalties. And here's the impact. The old mindset was simple. It's just a few Uber trips or some Etsy sales. The ATO will never notice. The new reality? The ATO receives platform income in near real time, so even small or irregular payments may already be visible before you hit lodge, ATO 2023. In our model Persona's case, around 82% of her side income was already sitting in the ATO's pre-fill data. The gap between what you think they see and what they actually see has all but closed. Now the second layer, and this one catches people out. The ATO doesn't recognise side hustle as a category at all. Your activity is either a hobby or a business, ATO 2023. If you earn money through continuous and repeated activities for the purpose of making a profit, running regular sessions, selling regularly, advertising and seeking customers, you're likely running a business, not a hobby, business.gov.au 2024. And that changes everything about your obligations. Mislabeling a business as a hobby can cost thousands. If you should have treated it as a business and didn't, the ATO can backdate GST registration once your turnover crosses $75,000, meaning you may owe 10% GST on past sales plus interest and penalties, ATO 2024. And if you don't keep records, the ATO can disallow your deductions, which pushes your taxable profit and your tax bill up. But treat it correctly, and you can claim legitimate expenses that genuinely cut your taxable income. The myth, I'm just making a bit of extra cash. It's a hobby. I don't need to tell the ATO. The fact, the ATO and business.gov.au both say if your side hustle makes money, you must declare it. And continuous profit-driven activity is a business, not a hobby. ATO 2023, business.gov.au 2024. And most major platforms already report your earnings. So what's the combined cost? In our model, underreporting plus misclassifying lands a sudden ATO bill of about $9,750, back tax of $8,125, plus around 20% in penalties and interest, modelled ATO frameworks. But it's worse than a one-off. Invested at 5% for 30 years, that same money could have grown to roughly $42,000 by retirement. Author's estimate. Meet Jess. She's 32, a full-time marketing coordinator earning $85,000. On weekends, she drives Uber and Uber Eats, sells handmade decor on Etsy, and runs a small fitness boot camp in the park. Last year, her side hustles brought in $28,000 gross. She files an individual tax return. No company, no GST. Here's what Jess found. Discovery 1, $23,000. That's how much of her $28,000 in side income was already sitting in the ATO's pre-fill data, almost 82%, before she entered a single-figure ATO LDB 2024. Uber, Uber Eats, and Etsy all report her earnings under mandatory data sharing rules. Jess had assumed the ATO only ever saw her PAYG salary. In reality, most of her secret side income was visible in real time. Discovery 2, $8,000. Running through the ATO's tests, Jess realised she intends to make a profit, runs boot camps on a regular schedule, and promotes a structured Etsy shop. That's a business, not a hobby. ATO 2023, business.gov.au 2024. And that's actually good news. Treating it correctly lets her claim $8,000 of legitimate expenses, fuel, materials, equipment, platform fees, cutting her taxable business income from $28,000 down to $20,000. Discovery 3, the painful one, $6,500 on $20,000 of net profit at her marginal rate of 32.5%. That's the extra income tax owed, modelled. Jess had treated side income as spending money and set aside nothing. Had she banked 25 to 35% of each payment, she'd have had $5,000 to $7,000 ready. Infinity 22, 2026. Instead, a surprise bill arrives, and paying late triggers the general interest charge, adding hundreds more ATO. Stretch Jess's situation over 5 years of underreporting, and the ATO catches up with a single combined bill of about $9,750, back tax, plus penalties and interest, all landing at once, modelled ATO frameworks. That's the cost of treating real income like pocket money. So, could this be you? Sign 1. You earn through Uber, Etsy, Airbnb, YouTube, or a similar platform. Sign 2. You genuinely don't know whether your activity counts as a hobby or a business. And sign 3. You haven't set aside a single dollar for tax on that side income. If any of those ring true, the next 3 moves are for you. 3 moves. Let's do them. Move 1. Check what the ATO already knows about you. Your pre-fill data is fed directly by those platform reporting feeds, so it's the single best preview of what the ATO sees. Log into MyGov, link the ATO service, then open Income Tax, Lodgements, and Pre-fill and Reports. Pull up the latest year and compare every platform income line against your own records and bank statements. Here's how. 1. Sign into MyGov and link the ATO service if you haven't. 2. Go to Income Tax, then Lodgements, then Pre-fill and Reports. 3. Compare the platform income shown there with your own records. What good looks like. Your declared income equals or exceeds the pre-fill figures with no income lines you're quietly ignoring. Move 2. Work out if your side hustle is actually a business. Use the ATO's checklist and the business.gov.au guidance. Focus on profit intent, repetition, and whether you operate in a business-like way. If the indicators point to business, apply for an ABN through the Australian Business Register and check whether your projected turnover could hit the $75,000 GST threshold. ATO 2024. This is general information, not personal advice. Here's how. 1. Read the ATO's in-business checklist on profit intent and repetition. 2. Compare your situation against the hobby versus business examples on business.gov.au. 3. If it's a business, apply for an ABN and check the $75,000 GST threshold. What good looks like. You can clearly say, I'm a hobby or I'm a business, and hold an ABN if you need one. Move 3. Build a 10-minute tax buffer on every payment. The simplest fix for a surprise bill is to never let it be a surprise. Open a dedicated side hustle tax savings account in your online banking. Then every time a side hustle payment lands, move a slice straight into it. and use ATO online services to check your estimated tax and any PAYG instalments after you lodge. Here's how. 1. Create a dedicated side hustle tax account at your bank. 2. Transfer 25 to 35% of every payment straight in, as 2026 guidance recommends, Infinity 22, 2026. 3. After lodging, check your estimated tax and adjust the rate for next year. What good looks like. By lodgement time, that account matches or beats the tax you owe. No payment plan needed. Why now? Look at the timeline. Between 2022 and 2024, the sharing economy reporting regime rolled out, legally requiring rideshare, accommodation, and gig platforms to report payments to the ATO, LDB 2024. In 2023, the ATO launched its Join the Bustle of a Side Hustle campaign, warning record numbers of taxpayers to declare all income and consider whether they're in business, ATO 2023. And across 2025 and 26, the ATO has expanded its data matching to receive income reports in near real time, meaning even small irregular payments are now visible. After you act, here's how to know it worked. You should see your declared income match or beat the ATO's pre-filled data. Confirm you hold an ABN if your activity is genuinely a business. And if a tax bill does land, your dedicated tax account already covers it. No scramble, no payment plan. Everything today comes from the ATO, business.gov.au and independent tax analysis. All the links are in the description below so you can check them yourself. So now you know, the ATO sees your platform income before you lodge, so check it, classify it, and ring-fence the tax. Next week, the work from home deductions the ATO is quietly disallowing in 2026. If this saved you from a nasty surprise at tax time, subscribe. We read the fine print so you don't have to.